Good afternoon. This is Anthony Glenn checking in with the Sit Rep podcast where we help you win in real estate. And today's guest is Constance Carlisle from Military Mortgage Group.
Hello.
What up, Connie?
How are you?
Let's freaking go. I am
Yes.
super excited today because we're going to be unpacking a lot of stuff. Now let me give the formal introduction. Constance Carlisle been doing mortgages since the 80s, all right? But today
Not quite that long.
Today we got 5 topics that we're going to talk about. We're going to talk about the first 5 things in regard to working with a mortgage professional, and the first 5 things as a buyer that you should know before picking a mortgage. Now, Constance, you've been in the mortgage game for how long?
It will be 15 years in May.
Oh, wow, 15 years. It's a long time.
Yeah.
What made you get in the mortgage industry?
Well, it was interesting. When I was going down to purchase my first home, it was very interesting. You didn't have a lot of information, and so I had to do a lot of self-teaching. And so from that point forward, I realized that there was a space and there was definitely a need, especially for veterans, to be taught how to utilize their VA benefits. And, really what does the financing look like? Because at that time, the VA wasn't a very popular loan product, just because of the time frame. So, it was really interesting and kind of learning, how to, how to educate and how to really make loans work for that segment. And now you see VA loans everywhere. But then it really was not a popular loan. You had a conventional, you had a lot of ARMs, a lot of really different types of loan products at that time that really did not suit or serve veterans like the VA loan.
Now, I do want to say that Constance and I have been working alongside each other since 2006, 2007 timeframe, and we specifically got into the real estate and mortgage industry with New Vision Mortgage and Real Estate.
Yes. The OG.
The OG, right? So let's talk about during that time there was a recession, right?
Yes.
So 2006, 7, and 8,
yeah.
that was the beginning of the recession. What did you see in the market? I know there was a lot of adjustable rate mortgages. There were a lot of interest-only loans, 80-20 loans, and I got a lot of people in trouble. How were you able to navigate through that during that time frame?
Well, actually, and that's when the VA loan became more popular at that time. And it was really actually great because, with the home prices at that, it wasn't great for everyone, but for veterans, it really gave them the opportunity to get their foot in the door where otherwise they have been really excluded from the market. Unless you had a ton of money down, it just really wasn't happening. And that was not, that's not really for most veterans what they have available to purchase a home. So it was a great time. That's when a lot of, especially our clients, were able to make a tremendous amount of money in investing in their first home. And over the course of time, what has really grown and what has shown, me and the mission is really utilizing your home purchase as a vehicle for financial freedom, or allowing you to leverage those resources to do other things that otherwise you wouldn't be able to, even in a full, career, being in the military. So it's been really fascinating to watch the amount of wealth that has been able to be built with the right education and the right choices when it comes to investing.
Now, another question that I have for you is that I remember during that time, there was not a whole lot of the VA cap before was not matching the house affordability during that time. So what was the answer in regard to veterans looking to purchase back then?
Well, that was really how that recession timeframe worked for veterans, because the home prices had declined so much that homes were finally fitting in that very limited budget that was set, by Veterans Affairs. Since then, they've done a really great job of moving those home values up with the market, with the different zip codes, because usually every year now it's gone up. So now you can really, fit and expect to purchase a home with the current market, even though it has increased significantly, especially in the last, 2-3 years.
Oh man, that's great advice. Now let's get to the meat and potatoes, y'all. We getting the main meal. So let's talk about the first 5 things that you should be looking for in regard to getting your mortgage and how to work with a mortgage professional. The first thing that you stated before that we were going to discuss was contacting the loan professional. Okay, what do you look for when you're contacting the loan professional?
Well, selecting the right loan professional is very important. Number one, not all loan officers, loan originators, loan executives are made equal. And it's not to, say that, there are some that are better than others, obviously, in any industry that is. But you want to make sure you're finding the right one for your situation. You have a lot of loan officers who, are really just looking for the low hanging fruit, the A paper buyer, which isn't always the case. So you want to find someone who's going to work with you and who really knows how to work with the product that you're looking to use. I mean, today we're really talking about the VA loan, so that is very important. Not a lot of loan officers utilize the VA loan, and so they may not, and with that being said, you really want to find someone who knows the nuances, because there's a lot of amazing and dynamic things that you can do with utilizing the VA entitlement. So that is going to be the first thing. You want to make sure that they are well versed in utilizing the VA loan.
Now, how would I find out if that person is well versed? Right. So if I was to accuse that loan officer of being a good mortgage professional, Connie's laughing at me because she knows I be getting on her about the admin stuff. Right. But she's done a lot of business. I think that you probably done at least, I would say maybe 3,000, somewhere around there, hovering around there in regard to VA loans.
Maybe not
total?
Quite that. Well, over the years,
Yeah.
probably close. I would probably say about 2,000, probably more accurate number. But it's been a lot. I've been involved with a lot of transactions, whether it be myself as the principal loan officer or assisting in the transaction. The one thing you do want to look for, especially when you're looking to pick anyone, whether it be a real estate agent, mortgage professional, is what do the reviews say? Look for the receipts. Do they come well? Do they have enough? What's the word I'm looking for? Do they come well recommended? There we go.
Yes,
recommended.
Yeah.
Do they come well recommended? So those are some indicators that will help you in the selection, because there's a lot to choose from. There's a lot of good ones out there. You want to also look to see, well, who are they affiliated with? What type of institution do they originate for?
Man,
I know that was kind of going into one of our next points of looking at brokers versus bankers, and what is the difference? What's the difference between going to, a bigger name, bank for your loan versus going to maybe a smaller broker, someone who doesn't have as much brand recognition? Well, the amazing thing about going to a broker is that typically they have a lot of, little banks behind them. Like in our case, we have over 30 banks that we're able to, shop your loan to see what's going to be the best rate, what's going to be the best scenario, because they all have different types of risk tolerances. So that's why, we can honestly say that, we can go to a lower credit score, in the high 500s, all the way up to, your A paper and get the best rates with one application. So most brokers have that opportunity, whereas banks sometimes have limited programs available.
Now, let me talk to you guys about what A paper means. So the A paper is the Maserati, right? Okay. The B paper is that Samsung refrigerator with the dent. It's a refrigerator, right? But it has a little dent in it. That means that you can still get the loan, but you got to do a little extra stuff. And then you got the participation trophy, right? That's the low credit score, and you got to do a little work. Now, in regard to that, and the reason why I'm talking about that, now that we talked about contacting the loan professional, we're going to transition to collecting documentation and why that's important. So the second step is collecting your administrative stuff. Connie, why is that important?
Well, the important thing, especially for on the loan officer side, is that then we can, with a very definitive lens, tell you what you can qualify for. If you just give me the basic information, name, social, date of birth, address, I'm trusting that what you're saying to me is true. A lot of times, there may be more income that you don't even think is relevant as a client. So that's why it's very important. Just go ahead and give your loan professional all of the documentation so they can verify it, see it, and see what's going to be, the most accurate pre-approval that they can give you. Because otherwise, it's just, I'm taking your word for it. Now, if I were to take your word for it, and let's just say there's some hairy things, or say maybe there's another payment, child support, spousal payment, something like that you didn't even think about as being relevant, then it could definitely cause problems. So that's why we always want to collect all of the documentation up front. So when you give a pre-approval, not only for yourself, but also the real estate agent that you're working with, because time is important for all of us,
Right.
then we know that that's an accurate depiction of your, not only your income, your credit, and all of the things that go into it. One thing I do want to kind of touch on is when you said, the participation credit score. We love participation credit score.
Yes.
And
So
that is,
let me pause that real quick. If you have bad credit, okay, we can give you a roadmap, and that transitions to our third thing is the roadmap. First thing is contacting a loan professional that understands your process. Yeah. Second thing is collecting documentation to make sure. Now listen, collecting documentation is very, very essential because the VA is going to give a diagnostic, and guess what? You can't hide from an MRI or a they're going to look at everything. So if you got child support, if you got payments, it's going to come out. So for those of you trying to hide little Timmy, you better be careful, because guess what? There's a little system that they run, and it's going to find it, okay? So do you remember what that system is? I can't think of it, but I know there's a system that they do. They run.
So there's a couple. I mean, there's several. There's several behind the scenes once that loan goes into underwriting that are checked. You have LexisNexis, you have Cavers.
Cavers, that's what I was.
Cavers is looking for any type of outstanding government debt. So if you have a student loan, or if you were in school a long time ago, it many times those types of debt, believe it or not, don't show up on your credit report. Mm-hmm. They're out there. So there is a question on the loan application that always gets missed. Do you have any delinquent federal debt? And a lot of times
they're going to be like, hell no, I ain't got no debt. I'm good to go. I have no debt.
Right. Well, you don't see it. And it's, sometimes those loans can fall off and disappear over time. Uh-huh. I wish mine would, but they're still there. But no, sometimes they do. So that is one thing to look out for. And to, as a buyer, think about everything. The relationship that you build with your loan officer is super important, because we are going to need and see and know everything. There is no hiding, and it is a relationship that is confidential, just like if you were going to an attorney's office or anything like that. We cannot share your information without your consent. Even if you're in a spousal situation, it's very important that, you give me consent to share all information with both parties if there's two parties involved. Trust me, I always have to make that clear, because it is a real relationship, especially during that, sometimes depending upon how long it takes you to find a home, it could be months, but the beauty of the position that we play is that it's not just about the home loan. It's about, for the first time, this is the first time a lot of people take a full diagnostic of their financials and are able to not only purchase a home, but get into a better financial position with budgeting and things of that nature. So, though that's the excitement, so many times you have clients who are like, oh yeah, the house is great, but guess what? We've been able to save this kind of money and be able to do these things just because of the home buying process.
Right.
So it is not just, sometimes it's less about the home, and it's more about putting your finances, getting right-sizing your finances and educating, in that space.
Ooh, that's good. Now we got the next one, the big three: roadmap,
yes.
roadmap,
yeah.
roadmap. Say roadmap with me, y'all. So let's talk about roadmap briefly, and then we're going to talk about budget and location, which would be number 4 and 5, the pre-qual, and the difference between the pre-qual and pre-approval. So tell me why it's important to get a roadmap for the mortgage process.
Well, roadmaps are really important, and that's another thing that differentiates loan officers, because not every loan officer will take the time to give you a roadmap. A roadmap is a plan to take you from where you are to where you want to be. And that doesn't necessarily mean that the credit score or the finances are bad. It just may be, hey, I can help you get to a better place, to get you a better interest rate, to get you a better, loan, per se, so those are all the things that roadmap can do. And so speaking to, again, anyone who may have a lower credit score, or maybe have had a few bumps in the road in the past, it's so important. As soon as you think that you want to buy a house, get in touch with the right mortgage professional, because the more you plan ahead, the easier and more enjoyable the house buying process can be, because it can be stressful, but a lot of times that stress comes from how prepared were you before entering into the active buying and looking. And so that roadmap will give you a very detailed plan of what you need to do, what you need to pay down, what you need to save, if there's anything that you need to dispute, and gives you a very accurate, outcome and time frame. So, for example, let's just say you may have a 580 credit score, and there's some things that we need to do. Maybe it's high utilization on your credit cards, and it may be as simple as, okay, we need to take 3 months, pay down these credit cards below 30%, and boom, we have, the 40 points we need to get you to a 620 and move you forward. Not to say that we couldn't help you at a 580, but how much more is it going to cost? It may cost you, say, $2,500 to save thousands of dollars with a little bit of time. So depending upon the circumstance, I always encourage, hey, let's get you into the best place that we can, and then we'll move you forward.
Oh, that's really good. Now, and I want you guys to hear this from my mouth. When you go to the gym, you're not working, you don't see results right away. And do you really think that, and now if I disappear, y'all know that the people got me, okay? So do you think that Federal, Navy, or AAUS or any institutions like that will give you that information if you get America of Bank? Do you think they care? Why? They don't care. They don't care because the higher the interest rate, the more money they're going to make, y'all. Wake up. So that is why it's essential to work with someone who's going to give you a roadmap, give you the stuff that you need to pay down, get you in the position, the best buying position for you. And then also, a lot of people are thinking that they need to pay off all of their debt, and sometimes that's not the right answer. Some people have collections and stuff like that where they think they're going to pay that collection and it adversely affects them, or dispute lates on their credit. So we see this stuff time and time again where people are just saying, oh, I need to pay this off, I need to do this, or I need to do that. And that's not the case. That's why it's essential. Now, we've talked about the roadmap, which is number 3. The fourth nugget for today with the Military Mortgage Group on the Sit Rep podcast is budget and location. Why does that matter? And I want you to also tell me why a loan estimate is important.
So, so budget is paramount, especially when it comes to working with clients, because just because you get approved for, say, $1 million house doesn't mean that you want to pay the mortgage on $1 million house. And so it's very important to make sure you're communicating, to your mortgage professional what your comfort level is. Now, your comfort level also, there's a balance between comfort level and being realistic. So you can't tell me that you want to pay, $1,000, but you want a $500,000 house. That's just not going to pencil, But, what we do is, if you tell me, okay, $3,000 a month is what you want to stay in, then that pre-qual is going to reflect. It's important for you to communicate, okay, I really found this house, we love it, and we want to spend a little bit more. Okay, then if you tell me that, then we'll do all of those things. So we'll make those adjustments. So don't think just because someone pre-quals you for $1 million, you have to spend $1 million. Because a lot of times that can shock someone, and they're like, oh no, I don't want to buy a house now. No. Then there was a lack of communication then on the budget. And so that also, it's important, to have, again, it goes to relationship. That relationship that you build with the loan officers is hugely important in the success of a transaction, because you may hit a bump. And so you need to have that communication to be able to navigate, through it. There is a solution for everything. There are very few issues that are insurmountable. Even when it comes to getting a mortgage, there are some things that are definitely difficult, but, with great communication and strategies, all of those things can be, overcome. And one thing that you mentioned with the banks that will remain nameless is the fact that a lot of those institutions are not set up to do the roadmaps and to walk you through. It is a pass or fail. It is approved or denied.
No, that's good.
And then it's just, okay, we'll come back. Well, what do I need to do? So that is why it's important to find that right professional, even if you have perfect credit. Let me tell you, you typically can get better rates, when you have more than, one, institution to shop from. So that's that's also a really, the importance of, finding that right professional. Now, when it comes to, kind of the nuances of, of it, your loan estimate is going to be extremely important. That is how you do shop lenders, if that's what you choose to do, because it'll show all of their fees. So you may have a rate. So let's just say now 4%.
Hold on. We got to pause for this. Listen, get a loan estimate. Get a ghost property, okay? Basically find a property, pick a property, say you want to write an offer on that, send that to your Uncle Tom that has a mortgage license that your cousin and your friend Day Day referred you to. All right. And make sure, because guess what? You can't just be focused on the rate because you could be paying for it.
Yes.
So loan estimate, loan estimate, loan estimate. Put that in your head and make sure you get that. Connie, can you tell us where, sorry to interrupt you, but I wanted to make sure that everybody got that. Where in the loan estimate can they find where the additional fees are at? And I want you to finish in regard to that. And then we'll go to the last thing, which is the difference between a pre-qualification and a pre-approval.
Gotcha. Well, the loan estimate, and there's going to be a section A box on the second page. And that's really where, the big like loan fees, if there's any, are going to show up. That's where you're going to want to quickly go there and, take a look to see, well, what is the cost, if there's any. Sometimes there might be, but that should be something that your loan officer is communicating with you, depending upon what economic, position we're in, the day, the rates, etc. Your rate is not secured until it's locked. Mm-hmm. So that's another question you want to ask. Hey, is this rate, if they give you this amazing rate, is it locked? Right? Mm-hmm. Because if it's not locked, then it could shift, because definitely rates can change daily, just like the stock market changes daily. So you want to make sure that, hey, if you see this amazing rate that you've decided, to leave lender A over, you want to make sure that you can really, at the end of the day, get that. Because what will happen is that, the market shifted, rates went up, which is a true explanation. Mm-hmm. But a lot of times, that loan officer knew that, and you're not in escrow today. So you want to also just make sure you're being educated along the way, and that you feel comfortable with the explanation of different fees. So you also want to look at origination charges. That is something that's really big, again, with those, banks that will remain nameless, is a flat, there's origination charge, and sometimes there's going to be a cost to the rate. So you want to look out for those. Everybody in this business works hard and, yes, should be compensated, but you just want to make sure that you're being fairly, charged for the transaction. And so that, you can definitely look at that in the loan estimate.
Oh, man, I'm telling y'all, man, Connie coming with them hot chicken nuggets fresh out the grease. Last but not least, let's talk about the difference between pre-qualification and pre-approval. What's the difference, Connie?
So again, kind of what I mentioned before, pre-approval is really the solid answer. That means that you have submitted your documentation, documentation has been reviewed, and that number that they give you is solid. A pre-qual is just, again, I'm taking your word for it. There isn't any documentation that has been secured or verified. And so, a pre-approval is going to weigh way more than a pre-qualification. Mm-hmm. And then you can go one step even further to an underwritten approval. An underwritten approval is when then it goes from someone like myself, who I've run all of the automated approval systems, and then I actually submit that into underwriting. And then that comes back from the person, the underwriter, who's going to sign off and give you final loan approval, that they have then reviewed everything, and it also has come back, A-OK. So there's different levels to the approval process. And the closer and closer you get to closing day, the more finalized everything gets, including numbers.
Oh, man, that was really good, man. What an awesome podcast today. Wow. I'm telling you, today we talked about the first 5 things that you guys should do in regard to picking a mortgage professional and prepare yourself to purchase a property the traditional way. We talked about contracts. We talked about how to pick a real estate professional, collecting documentation, a roadmap, a budget, and number 5, the pre-qualification process. Mm-hmm. Connie, wow, this is amazing, man. How can we reach you?
So, you can reach me at constance10k.com or www.militarymortgagegroup.net. We have an amazing team of real estate professionals. We absolutely love what we do, and we just see ourselves as change agents for our service members to get them, more financial freedom.
Magnificent. And guess what, y'all? You got the first 5 things that you need to do. And listen, make sure you guys stay tuned, because the next thing that we're going to be talking about is how to get your office accepted from a mortgage professional standpoint. You don't want to miss that next podcast. That's the call to action. So make sure you follow us on wire10k.com. Our Facebook and Instagram is on there, and we'll see you next time. Out.